All right, guys. So this is the part two of today's teaching, right? In the earlier lesson, we talked about liquidity. We kind of classified liquidity. I want to kind of give you guys a broad idea on what liquidity actually is. All right. So in this particular lesson, I want to use this opportunity to introduce time and price, right? But we're not going to go into details of time and price now, right? I will just introduce what I call the anatomy of a daily candle, right? This is the lesson where we'll be building upon tomorrow when we'll be talking about time and price, all right? Please, if you have not watched the first three videos before this one, do want to watch it. It's actually in the playlist and it's available for you to go through, right? So I cannot teach time and price in one day. So I have to introduce it using the anatomy of a daily candle, which is called the ICT power of trade, right? So it's something that you need to really know the power of trade, and then we can. So we're going to talk about the anatomy of a daily candle, all right? And you can put by the side ICT power 3. All right, so this is an ICT concept I learned from the ICT, and it's something I learned and I've been using. And this is one of the biggest secrets of my trading. Right, I use this a lot. The anatomy of a daily candle, right, called the power of trade. All right, now let's try to give a pictorial representation of a daily candle. Right, that is where this thing is talking about. Right, so a daily candle usually looks like a bar with a wick to the top, right? A wick to the top and a wick to the bottom, right? That's what the daily candle looks like pictorially, right? What the daily candle looks like pictorially, right? Now, if you look at this, we're going to label this candle very carefully, right? Let's assume that this is a bearish candle, right? So assume that this is a bearish candle. I'm going to kind of do some labeling now, right? So you guys can get the gist, right? This is going to really blow your mind, right? So this is the open price, right? That's the open price of the candle, and then this is the high of the candle. Then this is the close price. All right, this is how the daily candle looks like. This is the close price, and this is the low. Let me undo that so you guys can get it. So I want you guys to really get this particular teaching, right? This is going to really blow your mind, right? So this is a low. We're going to label it after now. I just want to put in the lines properly before. I don't know why the line is not getting there. My mouse can act up sometimes, but I really act up. Right, let me just today. Why is my mouse not going below that? All right, sorry for this. All right, so let us kind of label it. All right, so we have this happens to be the close price. We're going to put at the top. The close price, right? And then the line below is referring to the low, right? The low of the candle, right? And then this one is referring to the high of the candle, right? This is what the bearish candle looks like, right? So yeah, that was it is like the high of the candle and the higher wick, and then from this distance to this point is what we refer to as the body of the candle, right? So we're going to use this to signify that. So from the open price to that, we now have the body of the candle, right? So let's kind of can I put in text in this? Can you just take out the 50% and then label the body? All right, I want you guys to really get this thing, right? So I'm labeling it slowly so you guys can get it, right? So this is the body of the candle between the open to the low to the close price of the candle, right? Now, what does this signify? Now, for a candle to be bearish, it looks like this. It's usually open run higher before expanding to the lower portion and then going back up to create what a close, right? So this is what a daily candle looks like, and this also applies to a weekly candle, right? If you're a swing trader, use this for a week for your swinging idea, right? Now, when the market is bearish, as a smart money minded trader, you're looking to get involved when the market, after the market has made its high. Now, if you're bearish, you want to be selling the market after it has made what its high and it's now expanding lower. There are times in which I've spotted it just at the tip of the high, but that is not your aim. Note this: your aim is not to catch the high of the candle. You're only interested in what this expansion to the downside. So even if you don't get involved at the high, you can still get involved as long as you can still get involved here. You can get involved even down here, right? Even down here, anywhere in the body, you can get involved for a sell if you see an opportunity anywhere inside it. But it's preferable that you try to get yourself as much as possible very close to the open price, or if possible above, right? That is the most logical and most premium area to take yourself. So whenever the market is close to the open price, we can refer to that what's premium, because I know that some of you guys know discount and premium as 50% and those. No. When you're using time components, when you take your trade close to the open price or above it, then you are discount for yourself. Why if you are below the open or at the low, then you are at what premium for a buy. All right. So this is a bearish opportunity, right? Look at the bearish. This is for bearish candle, right? This is a bearish candle, bearish, a sell candle, right? So the idea is that you want to be catching your trade at, above, or close to the open price of the daily candle. Now, some of you guys ask, what time are we using? We are using what? The New York local time. So you simply come to trading view, you click on New York, and that is what you're using to calculate your open price, because the market is 90% controlled by the United States, right? So you're not using the daily time frame, or sorry, the daily time period of the New York or the USA New York local time. All right. So that is what you have to. This is not a crude depiction of what I'm looking at when I want to take a trade. So as an intraday trader, you're looking at what this framework, right? You want to use this as your model for taking what sells. While if you're bullish, you're doing what the opposite. So you want to be buying at the below the open price or very close to the open price. So the open price is actually a point of reference for you when you're bullish, and it's a point of reference for you when you're bearish, because that is where you are going to catch in what the best entries. And typically, the market typically forms the high of the day during the London session, right? Let me just talk about that a bit. So now we have understood this. Let's talk about this a bit. Now, typically, this is what the market looks like. The market will typically consolidate during the Asian session. Watch my video on Asian range. I talked about it just before now. Just watch my video on Asian range. The market will typically consolidate during the Asian session. And then after the New York midnight, the market will, like, if the market is bearish, it will likely go up first. Remember what we're talking about. This is the open price now. The market has opened somewhere around there. It will likely go up first, right? Then give us a sell confirmation above there, maybe a break of structure above that open price, right? So market will likely give us that was break of structure above the open price. Why is this always difficult? And then looking for a short. Now we can now transpose everything here to here. So this is now what your open price, right? This is the open price of the candle, right? This is open price based on New York time. This is that high, and then market has distributed above it, and then the market is dropping lower. So the movement from this open to the high is also called the manipulation, right? So the manipulation is the distance between what open to high. So I'm not going to type that in for you guys, so you guys can understand. So it's called AMD, accumulation, distribution, and manipulation, right? So accumulation happens during the Asian range. That's when the market is consolidating, right? It usually happens during Asia. Then we now have what the manipulation, right? So the manipulation is when the price goes the opposite direction first before going the intended direction, right? So the manipulation occurs next. It happens typically doing what? During the it happens between the between the midnight open to London session, right? That was between the midnight open to the London open, right? So between the midnight open to London open, right? Between when it is midnight to when London opens, right? And then the distribution is what it happens the rest of the day. All right. So this is what the market is typically doing from the time from the daily perspective. So the market usually accumulates during Asia, right? When you accumulate during Asia, the next thing the market is trying to do is trying to do what? It's trying to do what? Manipulate. Because the market, if it's there, it goes higher first before going lower. So that's what you should know. So the market is usually open after consolidating, then go higher, creating what? That's manipulative leg, right? So this is a manipulative leg, right? That manipulative leg, and when it's done with the manipulative leg, next thing does was is now the what? It now distributes. That's what the market is looking like from the real chart perspective. So now, when you have understood this, you cannot go to a lower time frame. All right. So you can, let's look at Friday yesterday, right? Just understand this one. This is a 15-minute chart. Right, let's use the 15-minute charts to understand this. And this is where I'll be wrapping up because tomorrow I'm talking about price, time and price in details. I'm talking about sessions, kill zones, all those stuff, right, in details. That is tomorrow. Right, but let us understand this first. Now, let's bring out our indicator that I talked about yesterday that shows Asian range, right? So now what happened? The market wanted to go higher, right? We can see obviously that we are in a bullish market. We saw the market was breaking highs. We see market, took out liquidity, broke this high, and the market has been kind of given a bullish setup, right? On the higher time frame, this guy is bullish. Look at the 1 hour now. See that the market is obviously bullish on the higher time frame, right? You can see the market is bullish on the higher time frame. Why? Because the market has been making new high. So this high, the market is making a new high, so the market is making a new high, and the market has been bullish, right? From the higher time frame. So let's go back to the 15 minutes time frame. Now, what happened? The market was trying to be bullish, right? See our Asia range between 7 o'clock to 12 o'clock. What happened? The market came below it. So you can see that the market opened around there, right? And then came down here. This blue line signifies kill zone, right? I use it to signify kill zone. And I'll be talking about kill zones tomorrow. But for your knowledge, kill zone for London is between 2 o'clock to 5 o'clock New York time, right? So you're looking at 2 o'clock to 5 o'clock New York time. That's when we look at our kill zone for our London pairs, right? So as you can see, it's 2 o'clock. You can see the time period there. 2 o'clock to 5 o'clock. So what happened? The market opened there. We are not focused on that. One market to rally lower. And then in our kill zone, looking for opportunities. So the market came down, then aggressively broke higher, right? So, and this happened during kill zone. And what happened? It is what below what the open price. Can you see how the bullish market goes first lower before going higher? So you can say if you saw this, you're not scared. If you go back to break structure inside there, they're going for your confirmations to do what to go low. And based on what I can see an order block that was created here. So these last two candles were actually kind of order block. Market broke higher, came to that order block, and then if you use the optimal, the ICT optimal to then trade, so it was a little beautiful, but you can see it came out to our 2% level. So just place the 62 level, stop loss below the low. That's been a very beautiful trade there for you, all right? So this was the looks at on the lower time frame, right? Let's look at another example. So this was kind of whipsaw market, so I wouldn't really consider this, but look at it. Markets came lower first, and finally it was it broke up. That's typically a bullish market. So another one here, it came lower first, and then it was broke higher, right? That's how it also usually occurs. Market wanted to sell, it went higher first, and then it went lower. I what the market looks like, right? But this is not 100%. It doesn't happen every time, but when it happens, it brings a form of clarity. So this whole price action, we can look at it from the daily time frame. Let us mark the open price on the midnight. So this is the daily time frame now. You can see that what I was talking about. So this is the daily time frame now. Just to confirm what I was talking about. The market goes down first before going higher on a bullish market, right? I want you guys to get this gist. If you get this gist, then you have made the most of this particular training, right? So maybe tomorrow, we'll be talking about time and price in full details, right? Look at it. Can you see the candle? What happened? Markets opened, went lower first, and then what? It's rallying higher, right? So this is just the summary of what we talk about the ICT power of three, right? So when I say power of three, because it's referring to what? Open, manipulation, or accumulation, manipulation, then what? Distribution, right? So in tomorrow's call, we talk about time and price in great details, right? The sessions to look at, how you should do internet trading, and all of those sponsors, right? So this video was helpful. Do well to like it, smash the like button, subscribe, share with your friends, and don't miss tomorrow's call. I just know what to be doing by 8 p.m. tomorrow when we'll be having this important call. So this call will be grouped in our playlist. Do want to watch it and like this video. Right? So see you guys in tomorrow's training. We're talking about time and price, Q zones, all this fun stuff, right? So see you guys tomorrow.